Ladies and gentlemen of the crypto space, we're live on a Wednesday, December 8th at 11:46 a.m. It's a hot topic. Everyone wants to know whether the markets are going to be bullish or bearish. When does a bullish market turn bearish? When does a bearish market turn bullish? When does a bullish market look like it's going to turn bearish but actually continue bullish? And doesn't necessarily matter. What I like to look for is resistance and support. If there's resistance, that means there's an exhaustion of buyers. If there's support, that means there's an exhaustion of sellers. So those are opportune times to take an entry into a position or add to a position, especially if you have a firm conviction on the directionality of a market over a rational time horizon. So I'm going to look up a couple of charts. I took one new position, a very small position, but I think the fib retracement is quite indicative of uh, of something that is meaningful from a technical standpoint that indicates I could apply some capital. Trivial amount, but a position nonetheless, which is very rare for me to take. I don't just take positions unless I think it is reasonable or is rational for a variety of reasons. So we'll look at the data, but we'll also obviously tell the story, the fundamentals, with the macro consideration of why these assets are more likely than less likely to head in a positive direction over rational time horizons. Let's pop it over to the main screen and take a peek. See who's in the stream too. Dan's in the house. It's a pleasure. Ryan Anton. Hey, no, I bought some Curve at 2.8, but I operate on the cheaper chains. What should I do with my Curve? I don't know. You can look into some of the LP positions. I don't think there's any leveraged LP positions, but if you're on Phantom, you're talking about Spirit and Spooky Swap. If you're on Avalanche, you're talking about Pangolin and Joe. And maybe there's something available for you. I don't have a very good answer to that. Aside from digressing too much on commentary, we're looking. Let's talk about what we're looking at. We're looking at Avalanche. Um, the narrative, especially with what's going on in the congressional testimony, is that these alternative networks are very early. So regulators are not even thinking about these yet. They're talking about Ethereum and they're talking about Bitcoin. And you got talking heads on, uh, on news outlets barely understanding the concept of when to buy, when to sell, and the volatility. And they're like, I can't handle it. I'm going to sell it. And it's just outside the realm of things that they process. So I'm looking at Avalanche because it's extraordinary for the same reason that Messi talks about it. And I agree entirely how he talks about it and why he talks about it the way he does. It's super cheap and it's awesome. It's innovative and it's evolving extremely fast. And the price action is obviously representative of that. But we found a fat top, a very big top, a bigger top than we found back in September. This is a heck of a retrace. It's to the 0.5, in my opinion, the way I draw it. You could draw the fib from a variety of places. You could draw it from here, but let's draw it from the lowest price point. Let's see what happens if you draw it from down here. It means it's pushing back up against the 382 or a 0.5. I think this is a big red, so this is where I'm going to stick to my drawing. Drawing is very subjective. You don't, drawing, you could always have confirmation bias where a particular way you plot something on a chart, uh, you don't want it to artificially confirm a narrative that you're trying to think. But all in all, that's why I look to the moving averages also. Let's zoom out to the weekly. So you don't have enough information. It's too new. And obviously we have remarkable asymmetric appreciation. So you don't have moving averages, albeit, what is that? Is that the 50 SMA? That is the 10 SMA. That's extraordinary. Look at Spell riding the 10 SMA on the weekly as well. You literally have assets riding the 10 SMA on the weekly. That's how fast these assets are appreciating. It's like startups that are just catching tremendous attention. And that's obviously the case. Look, we're looking at it. Twitter sphere, the crypto space is looking at it and they're using it. The narrative for this asset is extraordinary. I'm not too interested in holding spot, so I have an interest-bearing position. Actually, it's a leveraged interest-bearing position because I wanted to play around with it. I borrowed some MIM against Spell. Obviously, Spell is one of my larger positions, so I could have access to a fair amount of liquid capital. And I leveraged it on Abracadabra on Avalanche using the Avex MIM JLP Cauldron, which uses the Gen box, which is really awesome. So you're able to leverage an LP position, which obviously cranks up the returns. So an Avex MIM, which is a dollar stabilized Avex long position, so to speak, returning 57% of the money, which is not it's a huge percentage. It's not a huge revenue stream considering the amount of capital I deployed to the position. But I just want to get a sense of where we are with the potential directionality of price action. It's a heck of a retrace from 145 to 90, finding support thus far on two separate weeks above the 10 SMA. On the weekly thus far, and on the daily, it's above the 100 SMA, and it's just below the 10 SMA. But the last 1, 2, 3, 4, 5 days, it's failed to breach the guppies to the downside, which is a concentration of moving averages. I'd like to see it get above the 10 SMA to have a little bit more conviction, but it's also nice that it's above the 0.5, which is clearly a significant price point from a fib retrace standpoint. Obviously, if there was a retrace to the 618, that'd be more meaningful. But these are big wicks. These are big wicks to the downside. Therefore, for this asset to have its current price, considering these wicks, that means a huge amount of the asset was purchased, which indicates support. So that's the whole point. That's the title of the stream: bearishness or retrace and support. So, lower highs, lower lows, higher highs, higher lows. You could try and look for those patterns. Clearly, we don't have them at this point. What we have is a higher low. And it's a very big jump to get back up to a higher high. So the volatility I expect to be quite massive. But it was nice to see the support in this region. Doesn't necessarily indicate bearishness, especially considering this trend line. Might have a little ABC type pattern. I'm not going to measure it. I'm not one for really measuring Elliott waves to a precise degree, but clearly you had a depreciative impulse, a bounce, and then a large depreciative leg also, which look about equivalent in length, A to B, or the A leg, A to B, and then C. So A is about the same size as C, anecdotally, just visually. So there's a couple of things here that encourage me to think that there's a lot of support in this price region. So obviously, you have this horizontal. Well, look at where the 0.5 coincides with, which is a previous resistance also. That's nice to see. That was a big resistance hit back in September. So that's asset one that was on my radar today that encouraged me to put a little bit of leverage on and get 50% return on about, I think, 50 something thousand I borrowed. So it's, not to argue, is $600 a week, $2,400 a month. That's a salary for a lot of folks, and that's something to be very appreciative of, and I certainly am. We'll pop it over to the other charts. I want to look at Curve, Convex, and Spell. We'll look at Ethereum. Who's in the stream? Risky Cryptos here. Pleasure. Rupert, what's up, Captain? Killis is in the house. Ryan, Umberto, Harshal. Do you stake any platform tokens like Boo or Joe? I was tempted to take on a leverage X-Joe position, but the AVAX MIM caught my eye more so because of the dollar stabilization component. So I'm not interested in longing Avalanche. I don't see platform assets as suitable for a portfolio that I've constructed as I've constructed my portfolio. Like I'm not a fan of owning Bitcoin. I'm not a fan of owning Ethereum. I'm not a fan of owning Avalanche. So I don't own Avalanche. What I have is a derivative asset that's yielding 56% on the money that I think has support. And it's dollar stabilized because it's paired with USDT. So it's, or actually it's paired with MIM. I paired with MIM. Let's confirm. Yeah, I paired with MIM. I didn't pair with UCT. So the point is, I don't hold Avalanche. I hold the derivative asset that facilitates liquidity on the Trader Joe platform. That's the way to think about it. Crypto bets, a pleasure. Adrian, any thoughts on time? Is it getting close to a decent entry? So I have them up. I have Ohm up still. I don't have Wonderland. Not for me. I am always tempted to take a position in time as well as Ohm, but it's not beaten up to the point where I would want to yet. Both of them, I want to take. Here, let me swap over to mainnet. Wait, I'm on Avalanche. Let's take a look at Wonderland for a second. 4,000, if it got hit harder, 3,000, 3,500. Now I'm getting really tempted. There we see 2,500. Now I'm getting really tempted. The closer we get to the backing per time, the more tempted I'm going to get to take a position. Let's take a look at Ohm real quick. So 200, 250, and I'm really going to start to get tempted. Much more tempted than I feel currently. The charts look considerable. It's just that the numbers that I look at for considering these positions, I'm not tempted enough. And it takes a lot for me to take a position. So that's just food for thought with regard to those two assets. Umberto, IOTA is going to integrate its smart contract platform without fees at the end of the month. Tokens will be distributed to those who hold IOTA. No, not really, my friend. I'm not into a speculative bet to see how the price action plays out. IOTA, I don't want to buy it than to sell it. Um, I don't. So tokens will be distributed to those who hold. I'm not an airdrop guy. I don't care about airdrops. I don't care about price appreciation. What I want is an interest rate on my exposure to risk. So I'm taking a risk here. I have, I believe, 18% to play with regard to depreciation of the LP asset. I'll take a peek. Let it load up. Fuber, buenos días. A tú también. So I have 19% to play with on the depreciation of the LP asset. So there's the risk. I'm exchanging risk for 57% return on the money, which is something that I could stomach at the moment because of the size, the position size. Keeps me comfortable. AR, no, I love your perspective on income producing assets. What if you've been sitting on big bags of BTC and Ethereum, which have appreciated a lot? Do you sell and pay tax? I don't have an answer for that, my friend. I am a fan of avoiding tax obligations. So personally, if it depends on how you value the dollar denominated value of the positions. If it's $100 million worth of Bitcoin and Ethereum, just collateralize it and take 5% on the money, and you're going to be making a nice salary. But if it's $50,000 worth of Bitcoin and Ethereum, you're not going to be able to collateralize it and generate a meaningful recurring revenue stream. It's not easy to make a decision about what to do with assets that have significantly appreciated. Maybe you bought 10 Bitcoin at $3,000. So that's a fair amount of capital gains to consider. Maybe you have 500 Ethereum at $100 because it wasn't more than a couple $100 last year. Now it's obviously 10x that amount. It's a hard choice, my friend. Brian, a pleasure. Jake, what's stopping the industry standard of protocols paying their dividends in stables instead of X token model? Well, I believe you're referring to like an auto compounding type model, which is like what Abracadabra does with S-Spell, where it uses protocol fees to purchase spell from the open market, creating a constant buy pressure, a weekly buy pressure. There's nothing stopping protocols from choosing to pay their revenue in the form of a stablecoin, which is what I prefer actually. So you have a clearly isolated quantity of income as compared to a quantity of principal. Your principal generates revenue, and you're able. To me, that is the best way that I could manage a portfolio when I could isolate those two components. It's a choice of the protocol, and I am in favor more so of the way Convex does it. So Convex isolates your three curve cash yield. We were tempted with Geist and Blizz, but they've been beaten up due to supply inflation. Look at this thing is down to 43 cents. It's just bleeding out. This is not an asset I'd be purchasing. So I purchased a bit. It has paid itself off, luckily enough. Both Blizz and Geist, I have paid off positions, which is nice. And they continue to produce. I expect the price action to continue to go down. These aren't assets that I'd be purchasing at this point in time. They look like they just are. The floor is falling out from underneath them. And I see no reason for it to stop. The amount of emissions is going to continuously push depreciation of the asset people are liquidating. If it was going up in price, then people would be not selling and they'd be locking it, which is clearly price appreciative, which is what happened with the curve chart. So we'll take a look. I don't know what Geist and Blizz need besides time, because significant time is required to achieve what Curve did. So Geist and Blizz are in this first leg. Hyperinflation. Those assets are hyperinflating. Where is the bottom? Why is there a bottom? You know, at some point there will be seller exhaustion, and look what it took for Curve to get the seller exhaustion. I mean, we're just going to go from here, not even the top, because it launched at like 30 bucks. 94% from there, from $5 and 94% collapse. So we could easily see Geist and Blizz in the pennies. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 cents. So I don't necessarily want to be buying too much on the way down, albeit it worked out if you bought Curve on the way down below $1. But you had to hold for a long time in order to see daylight. You know, if you bought at the bottom, you started to see daylight, or at least glimpses that the monetary policy was stabilizing. Took a year. A year after bottom, that is a heck of a bet in the crypto space. That's a heck of a bet, and that's not something I really want to take with an excessively large position in Geist or Blizz. So I have my positions. They're locked, and we'll see what happens. I expect them to get continually hammered, and we'll check back next year to see how and if the monetary policy stabilizes. Charles is in the house. Oh my God, I finally caught the stream. It's a pleasure. 1 a.m. Oh, I can imagine. Well, welcome. Welcome, welcome. It's a bit different. If you have any questions, I'm happy to help. Derek, why are you against capital gains versus income? Capital gains, well, it's about structuring the portfolio. I don't want to sell positions. I want to sell yield such that the positions are metaphorically comparable to owning a business. You see what I did there? And I think that's meaningful. And that's the observation I had pretty much in 2020, where you could isolate principal from income. I don't want to buy Avalanche and sell it at $200 because then I have to figure out what to buy. I want to have something that pays me. I want to own a business that just pays me income and not worry about the price of the business. A lot of what I do, Derek, is a psychological means of engaging with the market optimally or hopefully in a sustainable way. If I'm constantly worrying, if I buy Ethereum at whatever, let's see what the price is at. If I buy Ethereum, do I have the Ethereum chart up? No. If I buy Avalanche at $90 and the whole portfolio is managed from a capital gains perspective and it goes to $150, I've made no money until I sell it. If I sell it, I don't have it. I no longer have Avalanche. And now I have dollars, which you have to pay capital gains tax on. And now you have to figure out, what am I going to buy? How am I going to make my income? I'd rather have an asset that, oh, fine, it goes to $150. It's paying me 50% of the money every second of every day. At the end of the week, I have an extra $1,000. I don't have to sell this position. I don't have to sell an LP position. It just pays income. So principal asset, I don't have to touch it. It pays income that's isolated, separate, and apart. It's a methodology that I discuss on how to sustainably interact with yield-bearing assets. Assets that offer dividends, assets that offer returns, assets that offer recurring revenue streams. It's about sustainability. I guess that's a good answer to your question, Derek. Killis, any thoughts on VVS Finance? Haven't heard of it, unfortunately. Shish, hey Noah, what do you think about UST call on Abra? Yeah, if you could actually find any availability of MIM, sure, that sounds great. Let me pause there. Up to Josh. I'm going to put it there. So I want to talk about the curve, or the spell chart. So we're talking about bearishness or retrace and support. For me, this is bullishness with retrace and support. It's a heck of a wick down. We'll see where the bottom is, but if we go to the 4-hour, we can see it's currently pinched between some meaningful moving averages. We want to see it get back above yellow, which I believe is a 200 SMA. Yeah. We want to see the green, which is the 50 SMA, cross back above the yellow, which is the 200 SMA, which would be a golden cross on the 4-hour. On the daily, they even have a 200 SMA. It's too new of an asset for the 200 SMA to be printing. But look at that. This was a massive retrace down to 0.786, down to from top to bottom. That was a massive price retrace. And this is big buying off the bottom. So people were fearful and people were buying the fear. Look at this massive wick down to 0.6 cents. 0.006, which is 0.6 cents, a fraction of a penny. So that is bullishness, unless proven wrong. But where's it going to go down? Where's it going to go down to? Is it going to really retrace down to here? Is it really going to retrace down to 0.004 price action support? You'd like to see it break the neckline. You'd like to see it get back above 0.382 because you kind of have a bit of a head and shoulders. So we'll see in the coming days. We'll see what it does. Then break, retest, and obviously the 50 SMA comes out, and we'll see what it does. That'd be nice. Solid positions, and curve just looks ridiculously awesome. This is just a ridiculous asset from a resistance flip support perspective. So this is, to me, this is not bear. This is not a bearish chart at all. These are massive. This is massive wicks of volatility, but this is resistance flip support. At the weekly, multiple candles of significant resistance flip to significant support. 1, 2, 3, 4, 5, 6 weeks of support above 345 price action. That's an extraordinary chart. Josh, you're paying much lower taxes because the income is much lower than the position size. So if your productive assets earns you 10% annually and you pay 10% higher rate, lower amount basically. Yeah, it's all complicated. All I know is if I get $10,000 a month, I'm fine giving the government, the federal government, 33%, and I'll take a $7,000 a month income, and I'll be very happy about it. They could take their cut, and I'm going to treat it as income because separate components of the portfolio. It allows me to mentally compartmentalize how I engage with the markets. Assets, income, businesses, income. Not buying and selling businesses. That doesn't make much sense, does it? Sean, I'm looking to pay contractors in crypto. Could be ETH Stable like USDC. I know I currently use a payroll company and not sure how to approach this. I don't know. I'm not going to dig into that. That's complicated. Um, there's a reason why stable coins are meaningful because they are a unit of account. Um, and there's still meaning to the dollar in that regard. It's a stable unit of account. Its relative degree of purchasing power is another story. The whole world of finance revolves around that unit of account. Um, that's a complicated topic you're heading down, Sean, but I think people would want to get paid in crypto. I'd prefer to get paid in crypto because I'll get direct deposit to an account getting 20% return on the money. Josh, what is your approach to leverage when closing a leverage position? I'm not entirely sure about what you're referring, but if I only have one leverage position open, and for me, uh, how do I approach that? As I press the close button, hopefully before liquidation price. So max, remove collateral, done. Well, deleverage. Oop, I want to repay, amount of collateral removed, flash repay, boom, done. So that's how I close a position. This is the only platform I really take a leverage position on. I certainly don't use centralized exchanges as much of the system, the ecosystem uses. Derek, interesting perspective. You're very welcome. Paul, hey Noah, glad to catch you live. A developer as well. Certainly don't mind these lunch and learns. It's a pleasure. I got to do them at the office also. Caleb, Noah takes a turn bag holder to another level. Yes, indeed. It's a different. It's different than a bag holder. It's different than hodl. Let me explain. Let's look at the spell chart. So I own down here when the asset launched. Will the asset come back down to basically zero? Its launch price? I don't think so. And that's the bet I'm willing to take. So watch it go up, watch it go down. All the while, I'm getting 20, 30, 40% of the money. Leverage is being taken. Platform fees are being accumulated. S-Spell is being bought. The protocol is evolving, likely to include an isolated interest component or an isolated income component. Everyone part of the Abracadabra team and a very tight-knit community of vocal supporters um, are incomers, and they want isolated sources of income. They don't really want to think of the spell price or the volatility, the buy and sell. I think that's just a waste of effort and a waste of time. Um, I mean, listen, Buffett is not buying and selling businesses to capitalize on the price differential of a business. He's not selling 20% of his businesses at the top, trying to find the top of a market cycle. That's not the way business owners operate. It's a little different than a bag holder because these are productive assets yielding 50%. I mean, how am I to really be thought of as a bag holder? I'll never sell the curve, but the curve is cranking out 56%. If I'm cranking out $100,000 a month, I don't really need to think about ever liquidating CVX CRV. And that's what I like about the position. I don't need to think about it because the ecosystem has evolved to the point where there's revenue streams and I'm able to model. You get it? I'm able to model my interaction with these markets not as traditional stock markets. And as I tell you all, I'm not going to make as much money as possible because I choose to interact with these markets, not capitalizing on all capital gains that are possible. Clearly, there's plenty of opportunity to buy and sell on the dip here. Where's curve? At 640, if I sold curve at like, what was it, 3.6 million, and then I rebought when this was like 2 million, I probably would have more curve. I probably have like 600,000, 700,000. 800,000 curve now. But that required work, effort, and risk. I'd have to be doing technical analysis much more than I currently do. I'd have to be sitting in front of the computer much more than I currently do. Whereas the way I interact with the markets, I press a claim button and it pays me. So, food for thought with regard to the notion of a bag holder and HODL terminology from a traditional perspective or a historic perspective. Trader Z, TWAP is time weighted average price. It's an average. Jake, LP is being drastically underrated in this space, and I'm with you. Anti and permanent loss propaganda poisoning brains. I love Bancor too, so there's no discredit to the narrative that they present. But if you look at a an LP token as a derivative asset that has properties unto itself, and you're forfeiting the underlying components, and you're just interested in the return, you're interested in the yield, that's all that matters. Even if, Avalanche goes to $10,000 and I miss out on $1 million, but I didn't own Avalanche. I owned an LP token. So that's the point, Jake, and I think that's the point you're trying to make. And I agree with that. I don't want to own risk on Avalanche. Otherwise, I would have bought risk on Avalanche. I didn't. I bought an LP position of Avalanche and MEM, which I leveraged. And I think that is a different asset than just the AVAX token. And that's, I think, rational and reasonable. Joshua, hey, no, I'm located in Florida. Any recommendations? There's only token tax. Token tax is the only thing I would use. Tokentax.io. Creative, what advice would you give, for example, a 20-year-old skills he should acquire in regard to programming coding? Solidity and Viper. I guess his question is, what's the hottest thing to learn? Solidity and Viper, they probably don't teach it in schools at all, so you're going to want to learn some base fundamentals. Java is a nice introductory language because it's extremely wordy. If you want to get into Android, you're talking about Kotlin. You want to get into iOS, you're talking about Swift. Dart, if you want to work in Flutter. Flutter is cross-platform, iOS and Android, and is picking up steam in the industry, and there's probably a fair amount of work out there right now. I wouldn't do React Native. I think it's the wrong choice. I don't find it interesting from a syntax perspective. Obviously, it's JavaScript centric, and it really was historically designed for web developers to be able to write mobile applications. So I'm not a fan of React Native at all, much more a fan of Flutter, whereas Dart is a cross between Java and Kotlin in a very interesting way with regard to syntax. So it's an enjoyable programming language. And there's good industry. Be able to find good work at 20. So Kotlin, if you want Android, that's what I do. Kotlin and Android are my industry. Still are, to this day. Simply Crypto, what a great mindset strategy, man. I hope so. And I'm going to put my money where my mouth is. And I'm going to determine if I made the right choice. What I know I am being is rational. It's not just holding an asset hoping it goes up in price. These are functional assets that have cash flow across protocols. These are monetary networks. This is not 2017. This is not an ICO. This is not a token that's just traded on an exchange. And when the token is sold for dollars, what are you going to do with the dollars? The dollars left the crypto space. This is not 2017. Always have to think about what's different this time, what's the same this time, and capital exiting the crypto space makes no logical sense. These are functional financial systems with monetary velocity. There's capital flow. Capital sitting on the sidelines makes money. You sell, if you think the market's bearish, sell for stable coins and you get 20% on the money. What's the point on moving it out of the crypto space into legacy finance to get 5% on a REIT? That's probably going to get hammered when the stock market corrects nonetheless. This is where my capital belongs, and this is how I deploy it. And I hope my ideas help. I don't want them to confuse people, and I don't want them to think this is easy. It certainly isn't. It's very hard to explain what I'm explaining to you right now to friends and family. When do you take a position? It's very hard to take a position, and there's risk in taking a position. And I sure as hell hope Avalanche holds and appreciates. Otherwise, I gotta keep an eye on my collateralization ratio, which is something I don't want to do, which is why I don't often take these types of positions. Otherwise, the extent of my interaction with the markets is pressing a claim button. It's like cashing a paycheck. Adrian, hey Noah, what do you think about the Blizz Geist PODL initiative? Uh, that's a big deal. Protocol owned liquidity, but Blizz and Geist aren't holding up. If you're just buying, guys, entries are very hard, and Blizz and Geist are not holding up in price. I would let's see if we could chart it. Not that this is something I really want to do, but let's do it real quick. You got nothing here. This is it's straight down. This is hyperinflationary decay. This is literally the first leg of curve. They need to figure out how to stabilize the monetary policy, and it took a year. It took a year for curve to stabilize its monetary policy. Expect Blizz and Geist to go down further in price. Be very careful with those assets. Lewis, my man, how are you, brother? Where should I stake CVX and curve, please? The convex. All goes on convex. You're able to stake up here. That's where you stake curve, and you go to locked CVX, and you're able to lock CVX. I think CVX is cranking out about 40% of returns. You're going to want to hold on to the Vodium.app. This is where you get to vote every 2 weeks and get a fair amount of bribes. You're going to want to hold on to bribe.crv. Actually, no, you won't. This is only for VECRV holders. I got a bit of a VECRV position. So, but Vodium is for you if you have a staked, locked CVX position. $719 million locked. Heck of a protocol. Convex is probably the protocol that turned curve most meaningfully disinflationary with transitory periods of deflation. It took a year for the secondary protocols to consume so much curve from the open market to make it disinflationary. Be very careful with Blizz and Geist. This is straight up a hyperinflationary monetary policy currently until potentially the PODL kicks in. Maybe they're able to stabilize it with the PODL. Maybe they need other protocols to want to consume the asset instead of liquidating it because they want to capture the revenue stream. Maybe on Avalanche, one of the OHM forks adds it as a treasury asset with a constant buy pressure. Or maybe they modify the tokenomics. But you also got to keep an eye on total liquidity in the platform. Maybe the liquidity dries up and there's less locked capital or less capital that's being used as collateral and less debt that's being taken, in which case the revenue stream is going to dry up. And then you have a cascading feedback loop. If the revenue stream's drying up, it's not going to be, it's not heading in the right direction. A couple of final questions and we'll wrap it up today. Sam, what do you think of Astroport? I don't know anything about Astroport, but any protocol in their right mind is going to adopt the curve monetary policy. It's empirically been proven to be extremely powerful, arguably an MMT currency producer. Derek, what do you think is the minimum amount to put into convex curve given the gas fees? A lot. A lot. But you know, you got to be careful with regard to entries. I always preface taking a position with being careful with entries. It would have been nice to buy the dip at 260. Right now it's at 390. That's a big difference in price in a relatively short period of time. It's already up 57% since the dip. There's no reason it can't get hammered down to the 50 SMA down here on the weekly. But looks good. The amount of support here looks incredible as compared to the amount of resistance here, and that's extraordinary. $20, $30, $40, $50,000 isn't starting to be a decent position. You know, $50,000, 50%, you're making $25,000 a year. You're getting $500 a week. Beats the pants off a lot of salaries around the world, if you know what I mean. Um, Lewis Spell, how can Danny bring us to zero emissions? I'm not going to dig into that now. And if anyone is best equipped to deal with that conversation, that's Danny and the team. I think they have made significant modifications to the emissions schedule, as well as redirecting incentives towards LP positions to voting bribes is going to be significantly more capital efficient. So I think they're making great choices. And I think in many regards, they don't have to incentivize LP. I think the voting bribes are quite reasonable, and people that receive the bribe are probably less likely to liquidate. Because if they're receiving a bribe, that means they're locking CVX, meaning they're likely seeing the benefits of locking and holding these productive assets. So I think it'll change the dynamic, the capital flow significantly over the coming months. First quarter, Q1 2022 is going to be interesting. Danny mentioned a burn of a couple of billion spell in January due to the emissions adjustment. So I look forward to that. I think it's in good hands and they're heading in the right direction. Harshal, how do you know when to form an LP pair before you're scared of LPs? Don't do anything you're scared of. Sorry, off limits. You need to be comfortable taking a position. If you are not comfortable taking a position, do not take it. That's the most important rule because fear causes irrational market action. So if you're fearful entering a position, you're not going to engage with that position optimally. So don't take it. Please don't take it. My recommendation. Maybe you want to figure out how you can get more comfortable where you stake $10 worth of USDT paired with Ethereum. Well, that clearly is not going to be cost effective on mainnet, but you do it on one of the side chains. But you got to figure out how to get more comfortable. So do not do something unless you are comfortable doing it. Very important. Adrian, thank you, Noah, for the answer. You're very welcome. Let's wrap up the stream today, 12:30 p.m. on a Wednesday, December 8th. As always, thank you all for joining me. Tell everybody to subscribe. After party on Discord, as always. Vasco, do you think Spell is the next Dogecoin? I'm going to end the stream, and I'm not going to answer that question, my friend, because Doge and Spell are nothing comparable. I hope that doesn't confuse, and it is what it is. I wish you all a wonderful day, and I'll see you either tomorrow or Friday. We'll wrap up the week. Be careful out there. Keep an eye on the Senate hearings, and I think it's more interesting times than ever. And this is the place where my capital belongs. So just be smart and be rational. Take less risk. You don't need to take more risk. Take less risk. Catch you next time. Peace.